I am Drew Clark, editor and publisher of Broadband Breakfast, and I am very excited to welcome each of you to Broadband Breakfast Live Online. Today is Wednesday, September 28th, 2022, and at Broadband Breakfast, we are very excited to welcome you for our continuing weekly show. We've been doing this for more than 2.5 years, almost 3 years. We started with the pandemic, a way to keep this community together, to talk about the infrastructure, the applications, and the policy controversies around what we call better broadband, better lives. We have a few announcements to kind of kick off our day. Very, very excited for this program we're going to have, and kind of a last minute change of plans allowed us to bring a exciting and topical event to the fore, which I will chat about in just a little bit. But before then, I want to remind everyone that we have an upcoming conference called Digital Infrastructure Investment Washington on November 17th, the Thursday before Thanksgiving. You can see basic information on Broadband Breakfast about it and learn more about it. We'll be rolling out more in the coming weeks. We came off of a special masterclass on broadband mapping yesterday. Thank you to those of you who participated in that event or joined us for that event. And we also just this morning laid out the schedule of our upcoming events. You can find these at the webpage, which I'm going to put in the chat room for those of you who are watching via Zoom, but it is available for everyone, whether you're watching on Zoom or any of our other platforms. I'm just going to put this in here and direct you to it. We're going to be talking next week about the Universal Service Fund and reforms to it. Really kind of a sleeper issue for some, but really crucial for the future of broadband deployment. We plan to talk about valuing fiber companies in preparation for IIJA's capital match requirement. We're going to be discussing workforce development and lots of developments in that front. And we will return to broadband mapping as promised in previous Broadband Breakfast Live Online events, as well as our special masterclass yesterday. There's so much going on in broadband mapping that we don't want you to be left out on any developments on that front. I also want to give a big shout out and big thanks to all of the sponsors of Broadband Breakfast. We rely on them to put out free programming like this, like our Broadband Breakfast Live Online that we do every Wednesday at 12 noon Eastern Time. Our sponsors include Utopia Fiber, Broadband.money, Google Fiber, Broadband Now, Lightbox, Geo Partners, Ookla, Michael Baker International, Pinpoint Capital Advisors, Bitstream Communications Inc., and Positron Access, as well as the California Emerging Technology Fund. You can find out more about our sponsors on the sponsors page, and look forward to continuing to, in fact, for example, yesterday, during our masterclass, we actually had some short videos that were provided by several of our sponsoring organizations, and very, very custom designed, very honed to and relevant to that topic of broadband mapping. One last housekeeping item. I want to offer a poll up. Obviously, this is just available to the people who are joining us via Zoom. There are many of you. Thank you for that. We know there's people that's on other platforms. You won't be able to participate in the Zoom poll, but I've just launched the poll here. You know what? I'm sorry. I just did the wrong one. That this happens, right? That's the problem with sometimes doing things a little differently. Okay, I've launched the correct poll now. There's 6 questions. There's some multiple choice questions and some non-multiple choice questions. And I'm going to leave this open for about, I guess, 5 minutes. There's no rush. Appreciate everyone offering your your answers to that poll, and I'll share some of the answers towards the end. But while that's running, let's go ahead and bring our panel on. Once again, very excited for our discussion today. It is timely, topical, newsworthy because of a recent report that was released by a variety of organizations. And there's so much that we can talk about, but let me let them have the first crack at the topic. We're going to talk about financing mechanisms for community broadband. And we're speaking specifically about community connectivity providers and the paradigm that it presents for thinking about digital infrastructure investment. And I'm joined here by Ben Matranga. I hope I got that right, Ben. Ben's the managing partner of Connectivity Capital and one of the driving forces behind this impressive report. You can see links to the report on the webpage for this event, which I will, of course, share in the chat window in just a moment. At Connectivity Capital, which bills itself as the world's first impact investment firm focused exclusively on broadband access in emerging markets, Ben manages more than a dozen investments in digital infrastructure, including ISPs operating in 16 countries across sub-Saharan Africa and Southeast Asia. So we're going to definitely get a more global flair than normal in our discussion today. Following Ben, we're going to hear from Steve Song, who is a policy advisor with the Mozilla Corporation. And Mozilla, of course, is makers of Firefox, a browser that I use. We didn't have much time beforehand, Steve, so I don't really know Mozilla's role in this whole process, but I look forward to learning, right, with the rest of our attendees here. And as the policy advisor with Mozilla, he's a consultant on access regulation and policy to the Association for Progressive Communications, as well as a research partner with network startup resource center, and he's got a great blog, manypossibilities.net, which is keen on African telecommunications and internet issues. And he also maintains broadband maps. So lot going for what he's working on there. All right, Steve. After Steve, we're gonna hear from Jim Forster. Jim is the general partner at Connectivity Capital, and I believe as well, the managing director of International Network Investments. He has 35 years of leadership and hands-on technical experience in networking, having spent 20 of those years at Cisco Systems. And he also, where he later became a distinguished engineer across various initiatives, and is a contributing author to Wireless Networking in the Developing World. So again, we're going to hear about wireless, we're going to hear about wired, we're going to hear about it all here today at Broadband Breakfast Live Online. So with that, let me turn it over to you, Ben, to tell us a little bit about who is Connectivity Capital and what is this report that you've just released on what you call community connectivity providers.
Perfect. Well, thank you so much, Drew, for having us on, and thank you everyone for tuning in. We're excited to be here. Hopefully we can bring a bit of international flair. I know, as they say in radio, we're a first-time caller, but a long-time listener. So we've been big fans of the content that you guys have produced, and we're excited to join you all. First off, the report on financing mechanisms for community connectivity partners. Our objective was really to demystify the process of financing for internet service providers, for community connectivity partners of all size. So our objective was to lay out some basic building blocks of what is blended finance, what is impact investment, what is debt, what is equity, what are the trade-offs, how do investors think about those different mechanisms, and demystify what those mechanisms are. As we like to say, often financing is the fourth act in a play. So there's some decisions that a company makes before then. How what is your owner operator model? Are you owning just the infrastructure layer or the service layer? A lot of those decisions are determined by your operating environment. So we tried to holistically explain some of those trade-offs and use it as an explainer for people to choose. Now, I think one of the critical things with the report is we purposefully published it in a format. It's under Creative Commons license, but we published it in a format that we wanted people to build on. We are not the definitive voice on financing by any means, but we wanted to start a conversation and let people edit it. And our hope is that it grows richer and deeper when people bring in more examples from all over the world. Certainly our focus on emerging markets guided some of that. We pulled some great case studies from fiber builds in the English countryside with Barn, from examples in Mexico and what Rhizomatica is doing, creating a meso organization with with funding from Universal Service Fund. There's a lot of different variety there. We hope people take this and add to it. Now on Connectivity Capital, we started Connectivity Capital, almost 4 years ago now, but it was kind of an organic growth. My partner, Jim, and I, who's here today, it was an organic growth out of observations we were making in the market about what products work best to grow networks. We are broadband by any means type investors. We kind of technology agnostic, really stage agnostic. And what we look to do is, where are folks building networks in some of the toughest places in the world? So our focus is emerging markets. Our role is to mobilize and deploy capital into the highest impact investments we can find across the globe. Our real scope is those emerging market countries. So, and to date, we've invested in over a dozen companies, 15 countries, serving large swaths of Southern Africa.
So, Ben, if your focus is emerging, and you clearly emerging countries, and clearly you get that focus from reading the 135-page report, why are you also bringing the U.S. into it? What's the common thread? Like what can the global experience teach the U.S. and what can U.S. examples, which you include in the report, teach this global effort?
Excellent question. Our goal from the very beginning is to create connectivity as a category in impact investing. And impact investing is using various forms of blended finance. And it's a term that we use in emerging markets, but we see that happens in the United States and in developing countries all of the time. And what that means is, when you have a social objective, you can use lower cost of capital to blend with commercial sources to achieve a social outcome. So a lot of what's happening with the US government programs is they are taking 0% money, non-recoverable grants, mixing that with private money, having restrictions around that to achieve a social outcome of connecting these unconnected communities in the United States. That's kind of one form that it takes in the US, but we also see it play out in emerging markets. We think there's a lot of cross-learning there. The big thing for us is, this is still the first inning for broadband access in impact investing, and we wanted to build as broad a tent as possible. We want everyone who's building community networks in the United States, community networks, social purpose, private operators, co-ops, everyone to kind of share their knowledge and their experience. And that's kind of what the objective of this first report was to do.
Well, let me ask one more question, which you can either answer or you can punt to Steve Song, which is, tell us about the partners of Connectivity Capital. You've said a word or two about them, but you've got the Internet Society, you've got this Progressive Communications, Connect Humanity. What's the role of these other organizations in the report and in this, again, this project writ large?
I think I'll jump in. I think that's a good one for Steve to take on.
Yeah, sorry. Steve's the genesis of this all, so I'll kick it to him and let him go with it.
Thanks, Ben. So I work with the Association for Progressive Communications, which is a global network of nonprofits that are engaged in digital rights work, and in particular, they support the development of community networks around the world. And also with Mozilla Corporation, who believe that an open internet includes everyone on the planet. And so the challenge of connecting everyone is kind of the agenda. And what we found, especially in sub-Saharan Africa, was that the growth of the internet, which has been miraculous over the last 20 years, is now plateauing. And that the reason it's plateauing is because the relatively wealthy, the relatively urbanized people on the planet have been connected, but now we have the challenge of connecting the more challenging regions of the world. And we discovered that the existing economic models need to be complemented by other strategies to extend connectivity more sustainably into remote areas. And so with that, we had a program developing community networks around the world. And what we discovered in doing it was, the stories of how community networks evolved were incredible. I mean, the creativity and the ingenuity with which these community networks developed were completely inspiring, but also very different from each other. And that, there didn't seem to be any place where there was a resource where you could go and understand how financing of these networks was being achieved. You can read loads about technology and and wireless, satellite, what have you, technologies about how to connect people. It's a very appealing topic, but there was just no resource. And we thought, first of all, we want to bring these stories together, to allow people to see just how remarkable what's going on is, but also to bring some methodology to it and some coherence. And that's where we turn to Connectivity Capital, whose experience in impact investing seemed perfectly complementary to this work. And Internet Society as well has been supporting community networks around the world for many years. They've been a pioneer in this space. And Connect Humanity, who you already know about and who I happen to sit on the board of, is another new investor in this space, recognizing the power of kind of locally owned initiatives to drive a sustainable model of connectivity where one didn't exist.
Let's talk just a little bit more about Mozilla. Again, not to put you are a nonprofit corporation, isn't that correct, Mozilla?
That is correct. Yeah. Well, it's a corporation owned by a foundation.
Oh, right. All right. Great. Well, lawyers like me need to keep these things very precise. So Mozilla has obviously talked a lot in its public messaging about the importance of an open internet, very active on the net neutrality / open internet discussion in the United States. Whenever I open my Mozilla Firefox browser, I see messages about, we protect your privacy. I mean, like kind of almost a lot more kind of, taking a stance, right? So how does that translate into the access area of the internet and broadband? Is Mozilla as a nonprofit or owned by a foundation entity, very active in promoting initiatives, or is this more kind of a project that you've gotten interested in, as well as having your background at Mozilla?
It is work that I've been doing for many, many years, and it's work that Mozilla felt was very closely aligned with their mission, and so they have enabled me to work on the area of policy and regulation to enable community-owned broadband, but also transparency in telecommunications networks and more open data in that space.
Wonderful. Maybe we can come back to the maps you keep up later in our conversation. Let's turn now to Jim Forster. Jim, tell us a little bit more about your perspective on Connectivity Capital and this report and the role you've played in it.
Thanks, Drew. Very happy to be here. And I guess briefly about my background, I started out as an engineer, so focused on the technical things, was really pleased, and it was a lot of fun doing early Cisco and helping the internet grow, helping Cisco grow. Both grew wildly beyond any of our dreams, but that's what happens sometimes when it's luck and good hardworking people, and quite a community spirit in the early internet. But towards the end, I got tired of product stuff at Cisco, and so I cast my eyes of far afield, what could be done to spread the internet further out. So I started traveling with Cisco, going to conferences, and learned a little bit and listening to a lot of people. Met Steve Song back in those days, and eventually started thinking, well, what could I do? And because Cisco had this great philosophy in their CSR department that you first apply your intellectual assets, then maybe some money or equipment. So I thought, well, what do I know about it? I know a little, maybe how to move packets. So I thought I could try and help people who are trying to grow internet. And also thought, well, I don't have a lot of resources, so what could be done very affordably? Well, I found Wi-Fi on souped up, the cheapest Linksys access points connected to an antenna, connected to a solar panel. I saw those in India in 2006. It was just opened my eyes up because the stuff was so inexpensive, but the packets didn't care. The packets got there. So a kid in Dharamsala, India, or Jharkhand or anything. He's on the same internet as we are. And that's just it's just profound. It's obvious because it's only one internet, but it's profound because these kids in a village or women in a village, they're on the same internet. Anyhow, so I was motivated and started doing a bit of angel investing in different companies. And but my dad was an accountant. So he always wanted me to take accounting. I never did, but I met up with Ben along the way, and he was on the finance side, on the network side. So we sort of melded each other. So that's how it came about doing these investments. Because I did, along the way, decide that there was plenty of technology and that there was a bit of the good networks were not getting funded unless they got really big, unless they had a really big tent. Now let's see. I'm going far afield with my intro.
So what maybe a little bit more about Connectivity Capital and
Sure.
what your company's goal is, right?
Yeah, as Ben said, our long-term goal is to create a new sector that banks can finance and maybe put us out of business. In the meantime, though, we're busy. There's plenty of opportunity, a lot of need to finance, early stage, but not startups really. So our goal is to find, and we can certainly find them, startups that are network companies that are up and running, that have hundreds of customers, that have proven track record, but yet can't get finance. In Africa, sub-Saharan Africa, and Asia, banks want to see hard assets. They say, if you have a house, we can lend up to half the value of the house. But how do you get started? A network does not have a lot of hard assets. But we did believe in the networks, and so we felt that we could look at their finances through Ben's tutelage. I learned a little bit about finance, and we can now think we can look at a company's balance sheet, its income statement, its strategy, its customers, and say, this is worth funding. And so we'll give them a loan. And our goal is our plan is to address what we call the missing middle of finance. So if a company wants to borrow $5 million or $10 million from a bank, the banks say, oh, please come into the office. If you want to borrow $50 million, the banks will say, we will come to you. Where are you at? When can we come? We'll bring, but if you want to borrow a couple $100,000 or $500,000, even if you're a good company, it's very, very difficult. You'll pay 20 to 30% interest. So that's a huge barrier.
Mm-hmm.
So that's where we ended up learning about little companies, learning they had prospects, but they couldn't grow very fast because of lack of finance.
Ben, go ahead.
One of the observations that we made early on in talking to WISPs in the United States and our friends at WISPA is, most of these smaller operators in the United States grew with SBA-backed loans in the early days. This is the Small Business Administration, which has essentially a credit enhancement program that works with community development finance institutions in the United States to lend and to grow. And they were able to purchase hard assets. And by and large, those programs do not exist whatsoever in emerging markets. We're playing a similar role.
Okay, so let's talk a little bit about the emerging. Let's build on this point, Ben, that you're making. I love what you're saying about how, and WISPs are a great example in the United States context because they're often just seat of the pants entrepreneurs. They just go out and they do it. They put it on their credit cards. They do towers. That's just what's so inspiring about the WISP story, right? And so what's the analogy for that in the developing world? And you're starting to get at this, but could you speak a bit more about what are the problems they're running into that maybe American kind of entrepreneur seat of the pants people are not right now?
I'll take some of that. So initially, and somewhat less now, but still to some degree, regulatory was a big problem. In India, you needed to put up about $400,000 to get a license to do internet stuff, to get a national license. And I'm coming from the US, why? Just a business license, pay your taxes, fine. But there are countries were used to having a somewhat closed regulatory environment. Steve can go on and on at length about that. That was one. Number two, though, was that mobile was happening in lots and lots of places, and it was a wonderful service. And really, we should credit it for huge advances in helping people in many, many ways. But it's not the only way. And in fact, as we've learned and can now articulate a little bit, if you want to bring bandwidth to a place like a school or a small business or a college or a government office, mobile infrastructure is not the cheapest and the fastest. It'll go everywhere, but it won't go anywhere as fast or as inexpensive. And affordability is key. So the US connectivity is, a few percent of your income.
Jim, sorry, finish this point you're making.
So affordability is key.
Okay, so what's the relevance of the fixed wireless versus mobile wireless distinction, particularly in the developed world?
So mobile did so in the US, Europe, Eastern Asia, there was a lot of fixed infrastructure. POTS, top copper lines, they could evolve to DSL. Similarly, there was fixed infrastructure for cable companies. They evolved from coax to DOCSIS to HFC, hybrid fiber coax. They built DOCSIS broadband, great service. So they're fixed infrastructure. Mobile came along, another great service. So there are two competing, fixed and mobile. Sub-Saharan Africa and India, the fixed line penetration was under 5%, maybe 2 or 3%. So there was nothing there. Mobile came along, jumped in, made a great service. You could call people, you could text people. Oh, look, they did internet too. So they sort of occupied all the mind space. And we're used to, unfortunately, seeing investors from, when we talk about this, they're kind of got reactions. Well, wait a minute, I thought mobile could do everything. And if 4G can't do it, 5G certainly will. And they fly into Nairobi and they get great service on their phone and they think, well, okay, no problem. So our goal is, and there was a famous Economist article, cover story 10 or 20 years, 10 or 15 years ago, how Africa was going to leapfrog wired and go straight to wireless. And they kind of did, but now we feel this need to backfill with fixed infrastructure, with fiber, with fixed wireless. And so that's what we're investing in is fixed infrastructure.
So that occasions a lot of thoughts and points here. So in the United States discussion, I think that it's fair to say that most readers and listeners of Broadband Breakfast will recognize a canard when they see one. And a canard that's often stated in the United States is that, oh yeah, we don't need to worry about, fiber or fixed connectivity because wireless is going to take off, 5G is going to take off, never really pausing to understand, how does your 5G signals get anywhere? It's by fiber backhaul that goes deep and deep and deep into the neighborhoods. So that obviously has some relevance and applicability to what you're saying. And I'm wondering, Jim, if you could speak to like, okay, in the United States, to put it simply, we have fixed line services, and fiber is kind of the technology that people are going towards. There's obviously a very substantial cable network that is getting upgraded and more supplemented, but fiber is the technology of choice for wired networks. And then you have in the wireless space, fixed wireless, aka internet service providers and other providers of fixed, that not like your cell phone, and then of course you got mobile wireless. Now, Jim, just continuing this, what's kind of the different models for success in the developing world? What works? Is it someone setting up an ISP type fixed wireless network? Is it going in and figuring out how to get wires laid and the infrastructure policies? What are the technologies that work in the developing world?
Apologies, I got a little printer going on in the background here, but
go ahead.
All the technologies work in the sense of it works, which are affordable. Started out was the unlicensed Wi-Fi over wide area, and it worked in a couple of respects. It was inexpensive. It could spread to if you had a dispersed audience, you could do point to multi-point, get to a lot of places at affordable. But now as density grows, that technology has problems. So you get to more and more smaller sites. And you mentioned about 5G needing the fiber. Well, another way to think of that is it's really 5G small cells is really fiber to the neighborhood or fiber to the curb, and then a little access point. So, but surprisingly, here's a really surprising thing. Fiber is taking off in India. Fiber is taking off in a lot of places. We see islands of fiber, not universal, but wherever there's enough demand, you could fiber a building, fiber a neighborhood, and then shoot a point-to-point wireless link into it. So that what is that? Is that wireless or is that fiber? It's both. It's
right.
It's a hybrid thing.
They're hybrid networks these days.
Yep.
I'm wondering if, Ben, you could tell us a little bit about these 10 case studies that you highlight in the report, and maybe an example or two of what we're talking about here. What unites these these community connectivity providers in your eyes?
Yeah, it's these are all 10 different case studies, and we purposefully selected them from around the world. There is some from the United States, like Ammon, Idaho, that your audience will know a bit about. But the idea was to kind of draw as big a net as possible and then pull out those lessons. And I think probably the biggest lesson that you'll see is that every network goes through kind of a life cycle of growth. So there's the early years of starting, then sustaining, then growing, then maturing. And the type of financing that they take changes in each of those phases. So, a lot of times it's easy to kind of look at the now. So for example, Barn, which is a network in the English countryside, they decided on fiber first. And what they realized is fiber is a 50-year asset. It's enduring. They started by essentially the users became the shareholders. 3,000 small users put up initial money that paid for their service for the first few years. That was the initial seed capital that got them started. They then transitioned over to essentially a foundation in the UK that provided them a cost recoverable grant that allowed them to grow that existing infrastructure out a bit wider. And then that caught up with the gigabit voucher scheme, which is now in the UK. They had to provide more financing for that because the gigabit voucher scheme only finances upon the live connection on for the customer. So there's a working capital gap between when you construct and when that customer is live and the voucher can be paid. That's one example. 3 different financial mechanisms through the life of that company. The thing that we see in emerging markets that I think is quite interesting is, by and large, and it's the example that you talked about, the WISPs in the United States that are small and scrappy. A lot of these small and scrappy operators have been going for a dozen years. So they've kind of, they've worked through a lot of the kinks and they're already at thousands of customers. So by the time we come in and invest, it does become quite a bit easier because they've got, headcount is in, the 50 to 100. They are fully built companies and they can take outside capital, manage that arrangement, and continue the build at a pretty aggressive pace.
Mm-hmm, mm-hmm. Steve, what are some of your thoughts on this question, or what are maybe some ways that you brought to this report in terms of what you think the goal of it and the audiences for it have been?
One thing that's striking for me is that there's no one answer. I mean, if you were to contrast 2 amazing success stories, one would be Ammon, Idaho, which is a local government-driven initiative, versus Broadband for the Rural North, or BARN in Lancashire. They operated outside of government. In fact, government operated to interfere with them and try and shut them down. So it's so dependent on people and context in terms of what is the business model or what is the organizational model that's going to sustain the network. The other thing that I discovered is that these networks, these community connectivity providers, are really more than just about connectivity. In almost every case, you see other kinds of social connections being built as a result of these initiatives. With Rhizomatic in Mexico, the networks were built because of the strong already social mobilization within the communities. But in other cases, where I live in Nova Scotia, Canada, there are community networks that have led to other kinds of cooperative initiatives, like bringing cooperative healthcare in. So it's really the social bonds there that are the, in some ways, the value that are being generated by these, additional value being generated by these community connectivity providers.
Mm-hmm. I'm wondering if you could speak to what you have heard in reaction to it thus far, Ben and others, to the report, that is. And I should point out that on the links to this page, we do have a video of a launch, and you had several of your panelists, or I should say your case studies, that were participating in the discussion. So that helps to, I think, give a little more flavor to it. So when we actually talk about specific examples. So would you like to comment on that before I'm going to open up the report and we're going to look at it and dive into it? But let's just get one more general comment about examples here.
Yeah. Well, one example in bit of feedback that we love is when people kind of nod their heads as they read it. What it is it takes a concept that they already know exists, and hopefully it explains and demystifies and clarifies it for them. We hope people are, understanding most of the content, but then also being able to use it to then magnify their messages. At the end of the day, most of the connectivity providers, the business model is fairly simple. You're buying wholesale and selling retail. right? And kind of, that process is, simple but not easy. And part of what we tried to do in the report is explain what are all the variations of that to make it more simple for operators when they're making those choices.
Mm-hmm. I want to go ahead and share the report, or at least a page in the report. This is, and I thought it was, interesting that the way you shared it as a Google Doc, in addition to the normal, typical PDF that we see so much of. This here, and please let me know in the chat if you're not seeing this window here. This is page 73, excuse me, from the report. And it reads, operating models, community manager operating models can be further developed. And then I'm got too many screens in front of me, so I can't see. Can be further defined by degree of participation in the network architecture stack. So I'm just going to step back because, again, a lot of broadband breakfast events, we have discussed the open access model. And this is, again, mostly in the United States context, right? But here, what you're doing in this slide is you're talking about a 3-layer network architecture, right? And on the left, you've got P for passive infrastructure, A for active infrastructure, S for services. I use different terms when I'm explaining this or talking about this, but the passive infrastructure here, you're referring to the physical non-electric medium, like, the rights of way or the fiber that would go in the ground, or, obviously the towers that enable a wireless infrastructure. The active infrastructure being the electronic equipment that operates and sends network signals that can be managed. And then again, separation of the services and the active infrastructure. And what you're doing here is talking about common community connectivity providers with examples of integrated operator owning or controlling all 3 of these layers: physical or passive, active, and services. Examples being the Barn one in Northern England, RS Fiber in Minnesota, EPB Chattanooga, many readers and listeners will be familiar with. The open access model, right? And here you cite Ammon, Idaho, as well as several others, where they're not offering services, but they are taking a role in the passive infrastructure and the active infrastructure. But then you've also got service providers where, maybe they're building on a network where someone has control or ownership of a network, physical network, passive network, and then others are operating the network or offering services. And then you've also got this reseller example. And sort of the last point I'd make on this before I kind of turn it back to you all is sometimes different parties are best suited to different aspects of this stack, right? And so in the open access model, for example, there's a lot of sense in having a municipality have a role in the physical infrastructure, which you call passive infrastructure, because they need to be involved as custodians of their rights of way. But while I'm not, saying it's a bad thing for cities to be involved in the active infrastructure, sometimes it can be handled by a different party, right? And sometimes that party will want to operate both the network and the services, and sometimes it makes sense to separate them. So the 3-layer network architecture that you describe, I think, is extremely well suited to explaining some of the reasons and advantages for considering open access, again, in the United States context, the domestic context. So now let me kind of, with that proviso or that laying out your own report, tell us a little bit about what led you to this model for thinking and how it's borne out in the specific examples that you're cataloging in this report. I'll start with you, Ben.
Yeah, I think it was an observation around the trade-offs that operators were having to make. I think you kind of, most of these operators, you have to take the operating environment around you as it is. So if you have access to backhaul, if you do not, if there is shared infrastructure, if there's not, these are all determinant factors. And I think what we wanted to get to the point is that there's no one right answer. I think the one answer that we did realize is that this is not just to kind of look at the incumbent and copy what they're doing. Every single operator that we cataloged, and then certainly every operator that we invest in, is doing something vastly different. And it really kind of comes down to they're bending the cost curve. They're not doing the traditional kind of, just a massive capital outlay, commission the network, kind of cut the ribbon, and now we're all online. It's usually built in segments, built in phases. They're only doing the segments that they have the most kind of cost efficient way of doing it. And I think, it's one kind of element that wasn't surprising, but is kind of obvious is, as you talk to these operators, they all have like a culture of frugality. And it's kind of a beautiful thing. Like when you're connecting people on less than $1 a day, or in the United States, when you're connecting folks in rural America, and it's, the CapEx is going to be more expensive to get to a rural area, you really got to do it in the most cost-effective, frugal approach. And what they've done is look at the environment around them and made the choices that they have to make sure that connection is there. But let me kick it over to Steve, because I know he's got a perspective on this as well.
Sure. I think a lot of those choices have to do with the technical capacity of the people engaged in solving the problem. And certainly we see that, across emerging markets where there's a lot less, say, familiarity with technology, then your choices might be higher up the stack than lower down. So if we look at that last example of Wikicatat in Mexico, that's a cooperative that has chosen an MVNO model because it allows them to mobilize in a way that's that's going to reach a lot more people than trying to build a whole stack themselves. And there are, in every country there are enabling or disabling factors that also affect your ability to to operate various layers of the stack.
Jim, your thoughts on this? You have anything to add?
There. First fail of the day. No, exactly so. And Ben's point about affordability is key, and that you have to. And what I've noticed is it's most affordable when most of the work is done by people from the community. It harkens back a little bit to Henry Ford's, who was mixed values, but one thing he said that was good was that he said he wanted his assembly line workers to be able to afford to buy a car. And so, and similarly in India, and I'm wearing an Air Jolly shirt, the staff, over 200 people that build the network, they come from the community. Sometimes they come with no IT skills before, but we put them through training. They learn on the job. They have the internet, so if they're eager, they can learn lots and lots of stuff. Anyhow, they're at the same expense level as the customers. Mm-hmm. So then that's quite key.
So we have a question here. I've got more, but I want to encourage questions from our audience. Mike Dunn asks, from my perspective, although not familiar with BT's efforts, I think we're talking now British Telecom and the various issues that involve kind of not just their OpenReach project, but other competitors there. Copper revitalization was a nice stopgap to get a little more life out of a degrading, copper infrastructure asset with limited bandwidth. Considering the properties of fiber and fixed wireless and the explosion of bandwidth needs, I can't see an investment in copper having any return at all. I'm going to ask the same question, but really just push more on the fiber versus wireless here, right? I mean, is wireless? You highlight several wireless examples in your report. Should we be encouraging those types of wireless investments, or how do we make sure we get the highest quality broadband to the various markets that have challenges to get deployment in?
Yeah, Drew, I would say that let 100 flowers bloom or 1,000 flowers bloom, in that some areas, if the people are dispersed, fixed wireless may well be the most cost effective and can go pretty fast if it doesn't have to service hundreds of customers per antenna. So if you can limit the number of customers per antenna, works great. Same time, if you have a denser area, fiber it. And so it's the best choice varies depending on the demographics of the area, the density of the people, and the geography of the terrain. To some degree, we got into this problem of digital divide and so forth, because when we with the deregulation in the U.S. and corresponding things in Europe and especially Britain, we went aside from the notion everyone's going to get service and so everything can be done. At the same time, also the needs vary quite a bit. So naturally, in the private sector, they're going to follow the money and they're going to wire up the most wealthy communities that will pay the most, and they can make a business proposition. They're not going to get too far with Wall Street saying, but we're going to also spend a lot of money on these areas that they don't pay too well, but we want everyone online. Wall Street won't go for that. So the communities that wanted it and who the equations did not work out for the incumbents, they fortunately through the internet, they were able to say, look, we're going to build our own network. We're going to connect to the internet and we're going to pay for it. Or maybe we'll have to find some help somewhere, but we want the internet service so badly we'll pay for it. That's new and different.
Can I add something in there as well? So indeed, in Lancashire in the UK, BT deemed that region uneconomic to invest in fibre, and part of the reason Barn exists was because of that decision. And I think one thing that's really important to recognise is that fibre is really a different kind of technology from other technologies in terms of its vast capacity and its duration as an asset. Right. So if you're able to take a longer view in terms of, paying off that asset, as, communities or municipalities may be able to do, then it becomes a very economic investment. And indeed, the innovation in the way that Barn actually built out the fiber, also brought, tremendous cost savings.
I've opened up your report again. This is page 101 and the next couple pages. Obviously, you're talking here about the spectrum of financing providers, and could you just explain this? Give Ben a chance to take a look at this. What are we talking about here by concessionary over to market rate? And you got these great terms: philanthropy, impact-driven, responsible, ESG-led, and traditional. What do each of these terms mean in this context, and what is the implication both for developing markets and the United States?
Yeah, it's a great question. I think the ultimate goal is to get at a blended finance capital stack, right? We're starting with networks that are not funded by traditional capital sources. So the question that any operator or investor that's looking at these networks is like, what is that blending going to be? And these are the variety of choices that you get along a spectrum of capital of return profiles. Philanthropy is typically straight grant, but I think the way we've tried to use it is it's quite larger. It can include government grants, and it can include access to universal service funds, et cetera. Impact driven, it tends to be this hybrid folks that are looking for preservation of capital. So below market, but concessionary returns. So not risk adjusted to market, but are looking to return capital. Then the next over would be responsible investors, ESG-led investors. This is environmental, social governance criteria that investors use. They're willing to accept a return that's a little bit higher. And then there's the traditional market rate investors. So on the traditional side, you can look at the BlackRock, the Digital Bridge, all of the big digital infra funds that we see out there in the world are targeting those returns in the high teens. As you move down the capital stack, you can get amazing social outcomes for folks that are willing to give up just slightly a bit of return for pricing this social return. For us on our fund, we have a very specific methodology about number of users connected. We're actively measured against, we raise what's called double bottom line capital. So both financial returns, but also impact returns. And our investors are, how many people have you connected? And that's kind of the metric that they hold alongside those financial returns as well.
We have a question from Chris Green that I'm going to turn over to Steve. Considering our panelists' experience with far-flung areas, any innovative approaches for sparsely populated areas where wireless might not be feasible? Example, forested areas.
I'll tackle that, but I'm not going to tackle it from a technological point of view, but more from an organizational point of view. And drawing on examples from Mexico and South Africa, where community networks exist. In Mexico, they're building their own GSM networks to serve communities of less than 1,000 people. In South Africa, Zenzaleni in the Eastern Cape, quite a remote part of South Africa. They're building Wi-Fi networks. But what is interesting is that we've seen the emergence of what we're calling a meso organization. That is a kind of intermediary organization that acts to support these smaller networks. Because if you're running a network of serving 500 people, you may not have the necessary tools or financial management or advocacy to support yourself. And so in Mexico, Rhizomatic has served that role, working to secure spectrum from the regulator, working to organize financing, and then federating those communities. Exactly the same thing is happening in South Africa. So these enabling organizations actually prove to be tremendously important.
So I'll make a further comment if I would
Go ahead,
about
Jim,
the
please.
technical side or the technology. So the remote areas that are forested are the toughest because a lot of the frequencies don't penetrate the trees so well. Low frequency does, but it's not there's other issues with it. So that is a legitimate issue, and that is where the LEO satellites, the Starlink, would shine, and because they're just up there in the sky, they beam down. So that's a great case for the LEOs for Starlink type things. However, having said that, if you think a little longer term, do these remote places have grid power? Are they on a road? If they're on a road, then there's telephone poles next to it with grid power. They should get fiber. The fiber is a small percentage of the capex that's already existed for the road, for the natural gas in the U.S., for water, city water, city sewage. Okay, maybe they don't have city water or sewage if they're remote, but they probably have grid power. Not always, but probably. They might as well have fiber. So in the meantime, Starlink, but eventually fiber.
We kind of go in this conversation in direction of technologies and the way technology rolls. We've also talked a little about financing and the financial models. I want to make sure in the remaining minutes we've got to touch upon how this relates or does not relate to the issues America is dealing with in the Infrastructure Investment and Jobs Act, right? And so we have a very substantial pool of money, $42.5 billion, that's going to the Broadband Equity Access and Deployment Program. And in a way, you kind of, Ben, as you were explaining the philanthropy, the philanthropic, and then as we move on to the other models of more traditional deployment, you said subsidization is part of this, right? And that's kind of what we're dealing with right now, because the government is subsidizing, but not completely. So what are your thoughts about what your report and what this concept of community connectivity providers speaks to as states and cities are actively thinking about the next stage in broadband deployment in the United States?
Yeah. I think the first thing we wanted to get through is that there's a lot of options out there. Understand the landscape, but then do a self-assessment of what pieces of the landscape actually apply to you. I think there's been a tremendous push in the United States, and with the amount of unconnected folks in rural America, it's a well-received and well-needed approach. Our hope is that this reduces friction. Right, people can get the information that they need to apply for the grants and use the information to apply for that. I think at the end of the day, though, like these grants won't, we're in a window, so you kind of have to jump on it and build the network infrastructure you can with while there's such low cost capital out there right now.
Mm-hmm. What do you think about the applicability of this for the United States, Steve and Jim?
I think it's very applicable. And in fact, it's really addressing the fundamental problem that results when you shift from we're going to connect everyone and everyone's going to have the same service. And with telephones, it was kind of easy because it was just one service level, a phone, and you couldn't have, I'm going to use 100 times more phone capacity than my neighbor. Not really. But with broadband, it's used varying capacities. And so the money went to where the money followed. Well, activity followed the money, let's say. Now we have to fill in a little bit more. So we're subsidizing it. The trick is how to have an effective subsidy that isn't politicized or that isn't the bureaucracy is manageable, and that goes to where the best results come. Because if you just dump money on things, people will suck up the money, and the results may not follow.
Mm-hmm.
That's the hard part, is making effective investments. And that's kind of why we chose to make loans, because they have to pay it back. If they pay it back, we're happy, and then we turn around and give the loan to someone else.
So how does this work from the perspective of the institutions that are responsible for this report? Connectivity Capital, Connect Humanity, Internet Society. I mean, obviously not all of them are playing the same role, but could you just delineate the role that they're playing and could play as the concepts in this report become more widely understood?
How about Steve? You want to take that?
Yeah, sure. So the role that APC and ISOC have played, especially in the global south, has been of seeding innovation, partly by offering small grants, partly by doing capacity building with organizations, partly by engaging in advocacy on the policy and regulatory front, which can be very challenging. But both APC and ISOC recognize the need to go beyond that and to create, a more seamless path to sustainability for community connectivity providers. And that is indeed the role that Connect Humanity is playing as an innovative new organization that is providing financing to community connectivity providers. And what I really like about this report is it's bridging the North and South. I mean, we think about, affordable access to internet, as a kind of, perhaps a poor country problem, but really it's an urban-rural divide. It's a rich and poor divide in every country, rather than, a North-South issue.
I've got another question here from Mike Dunn. Let me ask this, but give each of you an opportunity to make additional comments, closing comments on the report and what it speaks of for both the North and the South. The question Mike asks is a good one. I'm just going to go to the end of it. How can municipalities find multiple funding sources that won't sink the business plan? In other words, we think of oftentimes the private model and private capital, and then we think of public sector and cities, for example. But what I'm taking from your report is there's a continuum. And so I wanted to just kind of ask Mike's question there, which is, what can cities do to find other sources that still make it possible for them to operate in the way they want to?
I would say, I think that one of the key lessons of the report is de-risk the plan in each phase. Ultimately, if the goal is financial sustainability of the network, you need to be moving down that risk curve. So in the early days, whether that's government money to understand the pre-engineering work, whether that's a blending of philanthropy, meeting government money, but it's using that softest no return form of capital in the early days. Then as you de-risk it, running out that first pilot, using a small portion of commercial capital. And then as you go, being able to be financeable to more capital sources. I think the great parallel in the United States, frankly, is affordable housing. This is how large scale assets and how we house millions and millions of people across the United States. And that blending source has permanent capital sources from the US government. Right now, we don't have that with broadband. Maybe that'll evolve over time, but I think it's a great sector to pull lessons from, and governments across the United States are using that same model.
I guess addressing the question from another angle, sort of how do they figure out what to do? I suggest that one of your sponsors, Broadband Money, and there's probably others that are sort of all over this problem and digging into the rules and regulations and making presentations, taking consulting work. Okay, I can help you for a little bit of money. I can help you solve your problem.
Yeah. Absolutely. Thank you so much, Jim. Do you have any final thoughts for us, Steve, to kind of bring us home and conclude our program?
Sure. I think the one of the inspirations for this report really were just the human stories behind these community networks. They're just amazing. So really encourage people to look at these individual case studies. There's lots of background information on the internet, but they are incredible stories of human achievement. Really, that just make you want to go out and build more of them.
Mm-hmm.
I'll put in the chat window maybe a little bit early, but we have a great video from Swaziland about the impact that it shows. It's just amazing. We're going to launch it later, but I just can't help myself. I'm going to send it out here.
Well, go ahead. I'm going to say two more things too. Actually, Jay Pendergraft, you had two questions and I missed the first one. Second one here, shouldn't all funding be public-private partnerships? The Muni looking out for the best overall good and the population, and the private experts looking out for the best fit installs for the geography, demographics. That's actually another great question. So again, can't help myself. Do any of you want to react to that great question by Mr. Pendergraft?
I'd say yes, but how do you do that? I mean, so that's sort of an outcome that you want. How do you structure deals so that you get there? So that's the tricky part.
Mm-hmm.
Also, great municipalities, yes, but not all municipalities are great. Not all private companies are great. I think
yes,
it's
exactly.
very hard to generalize.
Mm-hmm. Mm-hmm. Well, we are at our time. Jim, I'm going to put this video up on the page for this event. And as I said, thank you for everyone taking the poll. I left it open the whole time. I'll just mention two takeaways from it. The events you're most interested in seeing in the upcoming agenda are broadband mapping and data. No surprise, there's 76% want to attend that, and digital infrastructure investment, 46%. Hope we'll get that number up to 100% by November 17th when we run the show at Clyde's of Gallery Place in Washington. But on behalf of our great group of panelists, Ben Matranga of Connectivity Capital, Jim Forster, also of Connectivity Capital, and Stephen Song of Mozilla and the Association of Progressive Communications. Thank you for being with us. I'm Drew Clark of Broadband Breakfast, and we'll see you next Wednesday at 12 noon Eastern Time. Take care, everybody.